Okay, let's start. Who's the first?
Ladies first. Yeah, go ahead.
Okay, sorry. Throw me in the deep end, guys. Okay, so hi everybody, just a quick intro. My name is Leah Callan Butler. I'm the director of Emphasis Consulting, and I also write a bi-weekly column for CoinDesk, a major crypto news publication in the US. And so a little bit of background on me. I'm actually based in the rural Philippines, working on a whole range of financial inclusion and digital ID solutions. I ended up here in August 2018 when I came over to work with a team of 6 software developers that were building a crypto payment gateway. I knew nothing about the Philippines before I got here, but when I arrived and I started to learn some of the stats, to give you a bit of context, it's 109 million people over here, and out of the adult population, only 22% have bank accounts. However, everybody here is very tech savvy. Filipinos are the #1 Facebook users in the entire world. They spend more time on the app every day than anyone else. Everybody speaks English. And, you know, when you start to put all of that in a pressure cooker, you start to see a population that is very actively looking for alternative finance products and very much ready to adopt them. So I've been here almost 2 years now and really fallen in love with the local crypto community. And I'm pretty excited about what the Philippines could do for financial inclusion globally using blockchain tech. So I'll talk a bit more about that later, but that's a little bit about me and what I'm doing now.
All right, I guess I'll go next then.
Go ahead.
My name is Daniel Truque. I lead business development for the alternative assets team at Symbiont. My background is in management consulting, banking, and quantitative finance. And then, as many of us gravitated towards the blockchain and crypto arena around 2016. Very quick background on Symbiont. The company is about 6 years old. The name Symbiont actually comes from the symbiotic relationship between finance and blockchain. It was founded by Mark Smith, who was the founder of Lava Trading back in the mid-2000s, which he sold to Citibank for like 300 million plus. And then he met Adam Karlstein and Evan Wagner from Counterparty. Counterparty, for those of you that have been in crypto in a long time, was actually one of the very early protocols that was putting smart contracts on top of Bitcoin. When they met Mark, they wanted to do something focused on the financial industry, and hence the approach was to build a permission blockchain from the ground up with all the relevant characteristics that you would need to operate in a regulated financial market. So our approach and the way we have grown has been through partnering with large financial firms to address some of their, like specific issues that they have. More recently, we ventured outside of finance and started doing applications within supply chain, which I'll be happy to chat about because this one touches end consumers and like small farmers and those type of users directly. So it's a very exciting area that I definitely want to touch on later today.
Okay, a bit about myself. So my name is Ophir Eliassi. Live in Tel Aviv area. Into the software industry for almost 15 years. A variety of projects from military project and intelligence and civilian security projects, and even involved in Windows mobile operation system, and later on some startup. The recent one sold to Facebook. Lately, on the last few years, I've been involved into a very interesting project that called Blocks. It's an ICO company. I'm leading the development there and the ICO, the CTO, and it's a data-based project for the cryptocurrency field. We actually started as a B2C monitoring and tracking platform for users, and later on realized that the valuable thing that we are providing is the data, and this is a huge challenge. And once we managed to get that right, we decided that this is what we based our customers and activity on, and moved to sale data as an API, and later even developed a product that is application-based for financial positions inside on organizations that deal with crypto, helping them doing taxation, managing their assets, and getting the whole picture in a single place. A project that involves us to be up to date with anything that runs on the cryptocurrency field and blockchain scene. Being able to monitor and see the trends and what products are more relevant and what our customers like and what is the most active on that, and how data is come through those products and entities, and connect them and reverse engineer them sometimes, and make it happen and get all the data from them, and after that getting into the analyze and digestion of the data, and later on provide it to our customers.
Okay, Leah, what do you think about next big thing and new opportunities for the blockchain startups, for the finance startups?
My internet was just cutting out a little bit. Do you mind repeating the question? Sorry, Manana.
Yeah, what do you think about new opportunities in crisis for the blockchain startups, for the stable coins and finance startups?
Yeah, so over here in the Philippines, one of the reasons I was very interested to stay here and learn more about the kind of tech that's coming out of this space is that it's very much focused on social impact opportunities. How can we actually use the tech to empower underserved or unserved populations, and looking at bottom of the pyramid type models. One of the things that I'm quite interested in is the opportunity for either blockchain and or crypto-backed asset transactions is to reduce the cost of cross-border remittances. So to provide a little bit of background on this, last year, so 2019, it was reported that we hit an all-time high at $554 billion sent to low and middle income countries in cross-border remittances. So that's actually 3 times the value of official development finance. So it's one of the most important forms of development finance in the world. However, with COVID-19, the World Bank has predicted that that will fall by 20% this year. So the people who are going to be really hit hard by that are the vulnerable families in developing nations that are dependent on migrant workers sending money home. A lot of those migrant workers have either been repatriated because they've lost their jobs or had hours cut due to the pandemic and the resulting economic downturn. So it's actually a sustainable development goal that the UN would like to get the cost of remittances down to 3% of the transaction for a US $200 transaction cross-border. But it currently sits at about 6.9%. So there's a lot of work to be done to actually reduce that cost. The OECD in a 2020 report identified blockchain as one of the technologies that could potentially help achieve this goal. And we're seeing some really interesting stuff come out of the Philippines for that, because the Philippines actually, about 11% of GDP is actually made up in remittances. So it's a really, really important part of the economy. In terms of investment opportunities, one of the ones that I've seen recently, which I can't name, but I'll give an example of a company that has come directly out of here so that you can kind of understand what it looks and feels like. It's a DeFi solution, which is designed for migrant workers that are sending money home. So as I mentioned before, the Philippines has a huge unbanked population, and it's a massive issue when people are trying to send money internationally if someone doesn't have a bank account to receive it into. So DeFi has been identified as a solution that can actually reduce the cost of remittances and also make it a lot more faster and transparent, potentially, helping with due diligence around issues with illicit activity, but also providing things like staking solutions. So, you know, vulnerable households that didn't previously have a place to be able to save money safely and earn an interest on, they could look at these kind of DeFi protocols to be able to actually get some kind of economic empowerment out of that. So at the moment, I'm seeing a lot of tech come into that space where, you know, very small and early stage startups are looking for, whether it's angel or VC funding, to be able to build the tech that would allow them to get to at least MVP stage and, you know, sort of bring on some partnerships to demonstrate traction. Anything around that social impact space is very, very big over here at the moment. I think that's it for
I will
me.
continue. Cool, so I'll continue. I wanna, considering opportunities and trends and some what's going on and what is the future of the cryptocurrency and blockchain. So I will refer to one thing that Leah just mentioned, and that is that staking. Beside having a huge event lately that called halving on the Bitcoin blockchain, we're going to have some one more event that is supposed to be huge, and I'm talking about Ethereum 2.0. The first step of it is going to obviously take Ethereum hopefully to a better place, and to make it a whole different story from what it is right now. And by moving from mining to staking, it's going to create a lot of opportunities. I sense that a lot of companies and projects are addressing this field and trying to figure out what solutions or what it can be provided from this change, because it's definitely an opportunity. And of course, taking solutions, and there are so many of them, all type of custodial, non-custodial, partial custodial pools, and so on. And obviously, since it's going to be very attractive and a good way to make money, without making any effort of spending too much time and at low risk, this is definitely something that's going to take a lot of traction on the next few months. We're experiencing lately that the last steps of this version or the first part of Ethereum 2.0, and I guess this is something interesting that worth monitoring to see how it comes out. That's it, I guess.
Okay, great. Yeah, I think on my end, I see three main areas where there's going to be a lot of growth in the coming year. All capital raising aside, because there's definitely a slowdown in investment given the uncertainty in the market. But that aside, there's like three main areas. One is in traditional finance. When we look at banking, even just within banking, if you look at central banks talking about central bank digital currencies, this is something that has been now there's been increased talks over the past year or so. More recently, there was the Bank of France RFP to propose a wholesale central bank digital currency architecture. We actually had two different companies proposing an architecture to Bank of France using the Symbiont blockchain. Separate from that, we've seen a lot of activity in companies trying to use blockchain to issue bonds, like public bonds and private bonds on a chain. Just last Friday, we actually had a press release about how Vanguard, along with the three largest custodians banks in the world, Citibank, State Street, and Bank of New York Mellon, they did an issuance of an ABS bond onto a Symbiont network. So there's a lot of activity in the area, and I think that's something that's really going to, improve the efficiency within the formal financial sectors. There's a lot more areas within that, including debt servicing, what we're doing with Vernier solutions on mortgage servicing, as well as if we look at collateral management, we're working on automatic FX collateral management. But then outside of mainstream finance, there's two key areas that I think are gonna see an explosive growth over the next 2 or 3 years. One is fractionalized ownership, and the other one is supply chain. So on fractionalized ownership, this includes like several areas, including, so we have fractionalized real estate. There's collectibles. There's a company that I really like that they're not on the blockchain yet, but I hope they are soon. It's called Rally Road. They actually sell fractions of ownership in different collectibles, including classic cars and first edition Harry Potter books and stuff like that. So it actually gives access to the masses to like investment in like this alternative type of investments. And then of course there's also within fractionalized ownership the concept of buying shares in private companies. That is something that we're actually working towards, working with several partners like Harvard Business Services for company incorporation, issuance of private company shares directly on a blockchain. We're working with Template Markets on that, and then creating a secondary market and the whole corporate governance on it. So I think the concept of private securities on a network, on a blockchain network, is something that has a lot of potential, and there's a lot of different parties trying to achieve that. The hard part is creating that full ecosystem where you have the end-to-end life cycle solution that also brings enough buy-side players to create the right conditions for liquidity. And then on the supply chain, supply chain side, there's a lot of really exciting stuff going on. With supply chain, when you apply blockchain, there's three main benefits: transparency, tracing, and tradability. A lot of the existing solutions out there are focused only on the transparency and the traceability component of it. The reason for that is when you add the tradability, you require payment on chain, and payments are inherently private, and that goes against the transparency that a lot of these platforms provide. So it's not every architecture is suited for that, and that's why I'm very excited to talk about GrainChain, which is a company that we're working with out of Mexico. They have 1,000 farmers on their blockchain in Texas, in Mexico, and another 1,000, so 2,000 total. Plus they're now onboarding about 900 more in Honduras. And what they do is pretty cool because they connect small farmers directly to buyers. So it skips all the intermediaries and they get paid upon delivery. So farmers that used to be paid 2 or 3 weeks later, if at all, now actually get payment instantly upon delivery. So you have true delivery versus payment. And best of all, if they want to move the tokens from the system onto their bank account to actual fiat, you get that within hours. So that is something where you're really helping the retail sector directly, and you can really make a change. And best of all, it's highly scalable. The idea why GrainChain has moved from Hyperledger Fabric-based blockchain, now moving on to Symbiont's assembly blockchain, has been actually so they can scale. So right now at 3,000 farmers, that is only the beginning. The idea is for them to scale to 10,000, 100,000. And keep going, and you need a robust architecture for that, and I think that's what we're able to provide for them.
And my next question about investment, maybe you have like some advices for the startups, and plus about pilots, maybe about new business models. If like a special advice for the new businesses and entrepreneurs. Leah?
I went first last time, so I'll throw it to someone else to start.
No, but it's if you talk about like the global startups for the new economy.
Yeah, look, I mean, as I mentioned before, some of the new sorts of models that we're seeing come out of the Philippines, which I think are interesting. Other opportunities are anything that is in the space of wealth creation, where you can kind of democratize access to investment. That's probably less applicable to the unbanked. So it's not talking, the poorest of the poor. We might be talking more middle class, and there's certainly a growing middle class in the Philippines that are starting to get involved with crypto markets, usually through onboarding via a digital wallet. Oh, I think we just had an additional participant join us. Yeah, so often they'll be coming through, say, a digital wallet that is providing digital payment services. So you can buy mobile load, pay bills, but it's often a crypto-backed service. And through that, people will be able to say even load cash through 7-Eleven, but then buy Bitcoin through this app. So that's been quite interesting in terms of wealth creation and new models that we can see for participation. I think, though, in terms of investment, it's a tough time everywhere around the world. And I think that's everybody would agree with that, no matter where you are at the moment. The kind of projections that we're seeing in terms of the downturn is really tough. Over here, like I work quite closely with the Manila Angel Investors Network. They're actually trying to set up a blended finance facility, which will look at getting, say, government backing to match industry funds, to ensure that startups that have demonstrated some traction and are perhaps getting to their Series A round aren't sort of left dead in the water just because of the pandemic. That's being positioned very much as not just an investment opportunity for the startups themselves, but an investment in the future of the Philippines. It would be absolutely devastating to see an entire generation of young Filipino tech startups wiped out because of the pandemic. And that's something that the investor community is really rallying behind to make sure that we don't lose a lot of that progress that's been made. So I think at the moment that is very much, I'm not seeing anyone doing anything experimental or risky or early stage. They're looking for those startups that have actually demonstrated some real progress and trying to give them that injection of capital to keep them going.
Great. Morgan, hi.
Oh, hey guys, can you hear me?
Yes.
Oh, finally. I've been having internet issues since midnight last night.
Great. Could you please introduce yourself? Morgan, could you please introduce yourself?
Oh, hello, you guys there?
Yes, yes. Could you please introduce yourself?
Oh, so I'm Morgan Hill. I'm one of the founders of Addis Capital, a small crypto fund. We trade all assets, including the top 10 cryptocurrencies, as well as equities, commodities, and Forex. And we've been trading for about 2 years straight now. Most of us have had fund or trading experience of up to probably about, I'd say, 15 years on average. It's a small team. There's seven total. And we got into crypto. Basically, one of my friends talked me into it initially, and I've kind of stayed in the area. So we don't really look too often at direct investments into startups or new coins, but we look at more established, so we're talking right now just top 10, Bitcoin, Litecoin, Ethereum. EOS is about as exotic as we get, and that has really been traded in the last couple months from us. And yeah, that's kind of what we look for the future. I think we're going to see more and more institutional investors transition into the space, and there's probably going to be a lot more diversification. So we're just kind of preparing ourselves for that and looking to grow from a trading technology perspective as much as possible.
Yeah, next question for you. What is like in your opinion, what is like the next steps and what is like the next big thing for the blockchain and for the new opportunities for the finance startups? Maybe like new business models.
I think there's going to have to be some component of ownership of the company in the more traditional sense. The invention of a smart token or some kind of an alternative asset class you could buy where you buy a coin, that works only as long as the coin is going up in value, and it doesn't really give you a lot of recourse if it's not. So I think we're going to see a total shift to where there's a structure where the coin probably has some equity component where, you know, there might be a certain percentage or a certain amount where if you achieve a certain goal or a certain event happens, then the coin may actually, if it's going to utilize the blockchain and smart contracts, maybe it'll unlock itself and, you know, allow you to actually own part of the company. Let's say if a price target is met, there'll probably be some kind of a use of technology where you use the blockchain to achieve one of those goals. I think that might be something novel that we haven't seen yet.
And what is your like the best cases during crisis? Best cases for the startups.
I mean, I would say anything that focuses on a core need might be the best. Like, for example, anything that has to do with, you know, tracking medical needs or supply chain, there probably will be some winners in there. But honestly, at this stage, if there's any kind of crisis, it's just going to come down to how easily you can get your money in and out. And so it's going to be probably Bitcoin plus one or two alternatives.
And it's the same for the technology cases. Is it right? What do you think?
It's gonna be interesting to see. I'm really not sure on that matter myself. I mean, it depends on how the funding flows. Actually, that's my main concern. You know, when there's issues like right now, a lot of the funding gets shifted. So some of it might get shifted too far away. But I don't really see beyond, you know, we've already seen any kind of new catalysts for technology growth coming out of a crisis. I feel like it's just going to be about survival.
Yes, but the main question about like a new business models and pilots for the startups.
Yeah, I'm not sure. It's going to be tricky to figure this out. New business models coming. You know, I've seen a few that focus more on consumer and retail. There's this one that I've been introduced to recently. It's called Tweeba. They're doing Twee. They're it's kind of like a commercial, like retail, where you can kind of earn products and whatnot. So they're going at like a different angle for it's kind of like, you know, an Amazon thing where you'd have certain discounts or overstock, where it's kind of like a club. I'm not really sure how that model is going to play out though. And as far as technology, you know, I'm still waiting to see a new invention that can take us beyond Ethereum. I haven't seen that yet though.
Yeah, I guess I can add to that too. I'm kind of with you, Morgan. Like the startup scene is feeling a little bit devastated, I would have to say. Like there's less experimentation going on, sadly, because the investment just isn't there. Everything's slowed down. But in terms of pilots, I think it's going to be CBDCs that we see over the next year. Central bank digital currencies, you know, it's clearly not going to be experimentation from the early stage tech space, but perhaps more government and central bank led. And possibly for developing nations that don't have the means or resources to be able to develop their own, they might end up partnering with Libra. I mean, I was just speculating on that recently, that Libra's purported focus on emerging economies and saying that if they don't have their own CBDC, they can use, say, a Libra peso in the Philippines and participate in that network. That might actually be a fairly attractive proposal for developing nations that need a digital solution to be able to provide, say, digital, government to person payments, for example, during the crisis. I think that's really kind of shot to the top of the agenda in terms of importance. And we're probably going to see a lot more of the pilots and experimentation coming from those large government entities as opposed to small tech startups. Just my opinion, but I think that's what will probably happen over the next year or two.
I've heard a lot about the central bank, you know, kind of doing their own thing. I'm very hesitant to admit that they will probably have some traction, but just because by law they will. I mean, they can just mandate something and make it happen. And most people will go along with it. I mean, if they outlaw Bitcoin tomorrow, how many people here will still have Bitcoin? I mean, you know, I will. I'm not getting rid of it, but some people won't. They'll be like, oh my God, that's illegal. I'm out. I'm done. And so you're going to create this black market. And, you know, I could see them easily turning that just slowly like a frog boiling in water. It's going to be too late before you realize it. They're going to be like, oh, well, hey, we have, you know, a bunch of these central bank coins. So just toss your illegal Bitcoin aside and, you know, give it to us. And we'll do a 2-for-1 exchange. I can see that happening.
Well, particularly too with everything that's happened with the Financial Action Task Force, we're starting to see various jurisdictions implement those recommendations now. So I'm sure you're all aware in terms of the FATF, they're an intergovernmental task force that has said that the travel rule, which the traditional finance industry has had to deal with for decades, will now apply to virtual asset service providers or crypto exchanges as well.
You mean from a year ago, right? Last June?
Yeah. So that's when it sort of came in. We've got the FATF plenary this week, which will be the first review of how jurisdictions are going with actually implementing those new rules. And, you know, there's still a lot of pushback from industry because a lot of people say, well, it's antithetical to have to identify both sender and beneficiary on either side of a crypto transaction. But the fact of the matter is that this is coming and we can't avoid it. So I actually think that we need a lot more people who come from the decentralization camp, who care about privacy, who really need to be participating in that conversation around how should policy be developed, how are regulations and compliance enforced so that we maintain those core community values around decentralization and privacy while still making sure that we drive forward mass scale adoption and adhere to these rules. But I think that's another really interesting space that will kind of play out over the next year to see what does that look like now, because the space is becoming a lot more regulated. I mean, that's good because I think a lot of people have been saying they want regulatory clarity. Sorry, that's a mouthful for a long time. But now that it's coming, there's also still a lot of pushback from industry, I think. But it'll be interesting to see how that plays out too. And actually, from a tech startup space, I think we'll see a lot more smaller firms. We'll probably see a consolidation in terms of crypto exchanges. I think a lot of them will actually fall out of the industry because of the increased cost of compliance, but we might see new entrants in the blockchain analytics space that are actually delivering analytics and compliance solutions so that crypto exchanges can actually meet the obligations of the travel rule and their compliance reporting. Anyway, I
think it's important to define, separate the regulatory requirements from the existing architectures. So the truth of the matter is that a lot of the existing blockchain architectures, given lack of privacy features or just like fundamental architectural issues like having unknown nodes running by unknown entities, are not compatible with the existing regulatory frameworks across many jurisdictions. The fact that the sector is getting regulated is not that it's getting regulated, it's that the regulators are recognizing that the functions that these architectures are performing are not in line with the existing regulation. And whether we all in startups like it or not, we are running afoul of existing regulation that has been in place for many years. So either the architecture needs to evolve to be able to do that, or the regulation needs to be relaxed. More likely, the architecture is what needs to evolve. And there are some architectures out there that can actually address these weaknesses that we see in some of the payments architectures. With the CBDC part, I'm not as nihilist as Morgan in terms of the CBDC approach. I think this is also due to a misunderstanding on the mainstream of how the CBDCs will be rolled out. A retail CBDC is something that I see very, very far-fetched. By retail CBDC, I mean a central bank issues a coin that anybody has access to. That is, I mean, absent China, I don't see any government doing that because it leads to a lot of issues. If you issue coins directly to the general public, you're effectively disintermediating the banks. If you do that, you essentially kneecap your monetary policy. You can no longer control interest rates to control the level of lending and saving in the economy. So the first step, and most likely the first implementations that are going to be out there, which, by the way, this is also the focus of the Bank of France RFP that I mentioned. It's a wholesale CBDC currency. A wholesale CBDC currency means that the central bank is going to be issuing coins, central bank coins, directly to banks in the system. So essentially, this is to simplify it. It's just a much more efficient payment rail for interbank payments. So imagine like a better Fedwire system. That is the first step. And then you can start thinking about like some retail CBDC implementation. But right now, I don't think there's a good blockchain architecture out there that can address retail CBDC. Wholesale CBDC, sure, but retail, that's much farther fetched, and that would lead to a lot of issues, not only architecture-wise, but also because of the issues with monetary policy if you end up disintermediating the banks. And actually, before we were talking about the advice for companies in the sector and how to, what should they do now? I mean, because right now we're definitely not in an easy moment for startups. We're seeing a lot of VCs investing only in their portfolio companies. That is a very different
B and C round. I think not for the like new business models, not for the new startups.
Yeah, well, even if we talk for like a later stage companies, the issue is that if you need to go back to your VCs to ask for money right now, the VCs are shoring up the existing portfolio companies that they have. So it's a much harder moment if you don't have the existing investor relationships, it's not the right time to raise capital. In addition, if you don't have a prototype, you're dead in the water. And this is actually behavior that I saw back in 2016, and it has repeated throughout when you have new entrants in the market, that people come with an idea of a startup that it's very idealistic. And they think about, I want to help like the specific end user, the little players. That is great, but you cannot stay in the market for long unless you have a scalable revenue model. So I think a lot of these companies, first, they need to focus on having the right investor relationships, and they need to focus on achieving scale. And that may mean that instead of creating a platform for rentals that help like specific house owners, you may need to partner with a large developer that can put 200 million worth of real estate assets in the platform, and that achieves the scale, that achieves the revenue that you need, so you can then focus on smaller users. But this is not the environment for trying to go too idealistic and then run out of cash, and then you either get acquired or disappear altogether.
Yeah, you're right. Up here.
Yeah. Okay. So from my side, I can say that I've necessarily decided to agree with Morgan and Dan, of course, Leah, about what they're saying, and the situation right now that is very complex for new startups. So I will maybe focus on existing startups that already raised money and how to spend it. So obviously, this is a good time for internal processes, trying to figure out whether your product or your vision is still stand for the new situation that came out lately with the COVID issue, and to figure out whether once you do that and to do the relevant changes in order to make that happen. Obviously, to have a low burn rate these days, it's very obvious that is very positive, and you need to earn time. Hopefully, it will be clarify and it will be very more solid state of mind for people outside in order to see what's going on and what's next, because the unknown right now is very huge, and you can sense that this is mostly what happening right now. It's not what is going on. It's more like what we don't know, and this step can end up with a month or can end up in a year. So you need to hold your horses and make sure that you have a last air to breathe, at least air to breathe, until it's getting over that. And there are a lot of tricks and stuff that startups can do, considering the technical startups dealing with some technical challenge, and how to make it more efficient, or how to spend your development process through this time. Obviously, if you raise money a bit before the COVID started, and you start dealing with your product internally, not going out and trying to sell it, it's the best time for you, because you the rest of the market is on hold, and you can run very fast. So you can catch up. You can find yourself in a position when you are catching up the race, and even if you start behind the other competitors, you're gonna find yourself eventually on a better shape, on a good position that you started late, and make it happen and do the adjustments through your development process. So of course, it's, generally speaking, this is something that is not a good situation for anyone or any startups, or most of the startups. But again, there are situations that, if you manage to do the right thing, the right things, you're going to find yourself on a very good position.
It's same for the global and for the China and US market. What do you think?
Yeah, obviously, I guess what's funny is that the COVID started, everybody was talking about China getting, becoming less and less important, and kind of the situation that is getting into a crisis. Eventually, we are finding ourselves on the opposite situation. So about China, I don't know how it's going to influence, because obviously I'm not involved not deeply involved with what's going on over there. But in Europe, definitely yes, it's the same situation. I see a lot of similarity between Europe and the US. I have the advantage of being outside of both of them and see it very clear how things are running on those different areas of interest. And by the way, from my point of view, from my aspect, living in Israel, that is a very small country on the one side, but very active and very involved on anything that is technical on the financial side. So it's very easy. For example, in the COVID situation, in order to make up the supply or the requirements for staying up above water, and I'm talking about anything that relates to medical care through this crisis. As a small country, it's very easy to get what you need, because you don't need much, and it's you can take that and also look from this perspective on the high-tech scene and even investments. You can find yourself not getting harmed or going through crisis very easily without any too many bad results. But this is way different from US and Europe, that is a huge population and running a lot of cycles of companies and technology. So I guess if we're taking it outside of the US and in Europe, there are some places, maybe Philippines, like Leah is going to probably know better than me. There are places, small ones, that can get into a situation when they get out of this crisis in a better shape. Am I right, Leah?
Yeah, I believe so. I'm optimistic, but I think we still have to go into this with our eyes open. I mean, some of the predictions are pretty horrifying. I know I just read something today that the World Bank has said that this year the Philippines growth, or sorry, I can't remember if it's Philippines or all of Southeast Asia, but growth was only going to be 0.1%. which is the lowest it's been since 1961. So this is a really, really tough climate, and I think that things are going to slow down for some time. But it doesn't mean that there isn't any opportunity at all. And I think that any tech solutions that are really mobilizing to the new normal are going to be absolutely top of priority for anyone. And we're going to see really, really fast adoption and take up. So in that case, like this isn't a blockchain solution, but for example, there's a startup here called Kumu. It's a little bit like TikTok, but it's actually a live streaming app, and it's quintessentially Filipino, but it's been really popular because you've got Filipinos here who are jumping online and they're doing all sorts of entertainment shows, whether it's a Bible reading or a cooking show, or they're singing. And the biggest target audience is OFWs, overseas Filipino workers, who watch this and they send tips to people who are doing shows online. Now, Kumu had been around for a little while and posting some traction and growth, but with the lockdown, with everyone in isolation, that technology saw exponential take-up. So I think anything out there that is actually positioned to function well within the new normal is possibly going to see the kind of growth that they never could have imagined pre-COVID. So there will be winners and losers, but I think anyone who can pivot will do well. But it's not like I'm cautiously optimistic, I guess. Once we get past this, the countries that have the greatest opportunity for upward mobility and innovation and growth, which, you know, obviously I think is Southeast Asia, because there is so much catch up to do. So you kind of have that leapfrog tech potential. That's where I'd be looking for investment now. And I know that people are nervous about putting money in this unstable climate, but I think it will pay off in the long run, absolutely. Oh, I think you're on mute, Manana.
Yeah. My question was about New York City for the Morgan and for the Daniel. What do you think? What is the difference between the China market and US?
For New York especially?
Yes.
You know, it's been very interesting. I've actually been making masks. I started a company called Masking Fashion, and just kind of got inspired to make masks the last couple months. And I still have to source some components from China. And I'll tell you, it's very interesting because in the last 2 months, the price of shipping between the US and China has risen so much that it's actually cheaper in a lot of instances, or at least it's faster to send it via air. So in other words, like you could put your product on a barge and send it all around the world, and it's going to go on basically a world tour before it arrives, or they could just put it on a plane and send it directly to you. And it's just fascinating to see how eager the Chinese companies were for products and for sales, that they were willing to just basically cut deals and put your products on a plane and get it to you as soon as possible. So there's been a lot of interesting like kind of nuances about kind of the growth or the lack of growth between I would say like the US and China. But right now, I think at least New York will be poised for recovery. I'm a little bit worried about people's hygiene. There's not a lot of people wearing masks as much as you would expect. And I know that New York was kind of, on the forefront of that. So, kind of worries me a little bit. But I think there's going to be ebbs and flows, but I think we are on the cusp of kind of a reemergence. I think one of the things that we might see for technology that I'm now thinking about is because of the real estate, and because, brokers and real estate agents, they might be a little more hesitant to do in-person appointments. We might see some technology use. There might be a spot for a startup to really, kind of take that area by storm as far as rentals or even the real estate sales in New York through kind of making maybe a broker contract or a broker coin or something. I'm sure there's already a few that are working on that, but that's something I think. But I don't know. Overall, I think we're on poised for recovery. It seems like things have been going better. I'm just hoping people can, keep their guard up and just not throw caution to the wind. And as long as we do that, I think we should be okay.
Daniel.
I think like comparing US and China, I mean, at least like talking from the New York perspective, I think there's like echoing what Morgan mentioned of like changes in real estate. The work from home is definitely something that's gonna change the way a lot of companies exist in New York. I'm not sure, for example, what this is gonna do for, if this is gonna help or hurt remote working locations. Less people likely to want to go to a shared office, but at the same time, more people who want to perhaps go to a private office where they don't need to work from their living room. I mean, I have a fancy background here, but it's fake. I'm in my living room, so it's like, let's be real about it. But then in terms of US and China in general, talking from the business perspective, on one side, there is a lot of money leaving China trying to be invested overseas due to all the issues with capital controls in China. On the other hand, China itself is a huge market that like many companies would like to enter, but at least from the point of view of technology companies, entering China is super risky. There are IP protections in China are pretty much inexistent, or at least they're not, they're just not enforced. In our case, like in Symbiont, we are not allowed to, if anybody from our company, anybody from our 100+ employees goes to China, we are not allowed to carry our laptops. I think not even the phones. It's that level of risk, especially for companies that do technology and have proprietary code, like in the case of Symbiont. It's super risky to do business with a country like China. So yes, it's a big attractive market, but it's off limits for a lot of technology companies that want to protect their IP, and that is just unfortunate.
And last question, maybe you give some like the short advice for the startups, like for the next year, for example.
I mean, in terms of advice for startups, it's echoing, just repeating what I mentioned before. I think like definitely have a short-term revenue model. So achieve scales and get revenue. That should be like your two priorities in the short term. If you don't have a prototype by now, you probably should try to do something else. It's going to be really hard to raise the capital.
Yes, and maybe what do you think about like the special marketing during the crisis?
By special marketing, you mean like a lot of all the online promotion and stuff like that?
Yeah.
I think like during this crisis, during this pandemic, really, because the pandemic is what's driving the type of marketing, not the fact that it's a recessionary period. The online events like this one, it really helps people to leverage their time. Like you can actually like go to like 3 or 6 different networking events in a day, meet a lot of people, talk to a lot of people. So people are more open to having this type of digital interactions. I used to have a lot of business development calls. Now they're always video calls. So when you have like the video component of it, there's more of a personal connection. Before, to have that personal connection, you would have to fly to another city and meet them face to face. Now, like just you can do all that like from the comfort of your home. So I think it's gonna change significantly. It just makes at least the business development side, I think it makes it more convenient and potentially even helps get closer relationships faster up front, because you're forcing the video interaction, when before it would just be a phone call where like if you don't know if somebody's paying attention or they're on their phone or something. When you have them on video, they're there. They gotta see you and you gotta see them. So I think it helps to establish that connection.
Yeah, thank you.
In addition to what Dan said, for him it's taking is a few hours travel. For me, it's a day and a half going to the other side of the world. So that's definitely shorten the time and make it more efficient.
Yeah, Morgan.
I mean, I think just survive. I'm still on the survival mode. I mean, the thing is, like, you think about it, and there's been a lot of shitty companies the last like 5 years that have come out, and they've had many opportunities that they shouldn't really have been afforded, just because a lot of the money didn't know where to go. And we funded a lot of things that are just apps. The apps they don't really solve a real world problem. They improve a real world problem that's already been solved marginally. Something like a better delivery service that uses an app for delivery. Are you getting products there faster with, teleportation? No, you're not. Are you flying it there? You use even drones to do it? No, you're just trying to organize the human resources to move the product in a more efficient manner, and you might be marginally successful. So we've had a lot of luxury, to kind of create ideas and actually get funding. And now people are going to realize, like, oh, we don't need it at this certain level. We can actually scale back, and you'll focus on things that are more important. And I think online, just everyone using Zoom now is still kind of hilarious, because we found major, flaws within the Zoom as far as security, but yet it's a preferred one. So we're going to have all kinds of fun little issues, I think, to address, I think, as we go forward with this. So, if you're a startup, just, try to take care, make sure your house is in order. If possible, be flexible for policy changes. I mean, we just talked about central bank going digital. That's a revolutionary change if that occurs, even if it is, like what Daniel said, probably focused on, just institutional and interbank transfers. Even if it's that level, the fact they're doing it is going to be, transformative and revolutionary. And we don't know what other things are coming down the pipe. I mean, they did a random stimulus package where they just sent, $1,200 to every American out there, even if you didn't want the money. So things like that are going to really be unexpected. So, imagine you're a client, you're expecting all of that you're looking at your clients. You imagine that, they all of a sudden have $1,200. Well, that's revenue that if you had the pipeline and, you'd an established product that was needed, you could take advantage of. So there's gonna be a lot of things, I think, that just behooves a startup to just keep their head on a swivel, look at the growth opportunities, and above all, just survive during a time like this. That's probably the best thing. Think survival long term.
Guys, thank you for sure. Leah, do you want to add something?
Yeah, just really quick. I think there were two things you asked. Marketing. I think we have a golden opportunity right now to be able to connect with people digitally, where people are actually open to digital interactions, whereas that was kind of assumed to be a lesser value interaction before. So the one thing I would say is, don't lose that opportunity. Be authentic. Don't bullshit. Don't use templates on LinkedIn. Actually connect with people that you genuinely want to connect with and have a reason for it, and demonstrate it. You will actually make really amazing connections that you possibly could never have done before. For startups, I would say it's time to cut the fat. Cash is king, just like has already been said. But I think the next step is to kind of think, what next? So I would imagine if it was 2008 and a white paper landed on your desk about an electronic peer-to-peer cash system, with the knowledge that you have today, what business would you create back then? Or if you were at the dawn of the internet and you knew how that was going to change life as we know it, what kind of business would you have created back then? What kind of products would you have been imagining? I mean, I would sort of put yourself in that position now and think, okay, in terms of my startup, is it relevant to the new normal? If so, that's awesome. I'm in a great position. How can I amplify this? And if not, how can I pivot? They need to be thinking about changing consumer needs, the changing world, and how they can respond and adapt to actually make the most of it and leverage the huge opportunity that is there now. Not everyone will grasp it. So if you can, take it and run with it.
Thank you so much, guys. Morgan, Daniel, Leo, operator, thank you for your time. And see you guys in New York City. Thank you.
Looking forward to it.
Bye.
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 Bye, guys.
Bye-bye.